All right, welcome to Talking Investing. I am Tom, and as always, this is not financial advice. Today, I want to do something a little different. I want to talk about the Fed, interest rates, and inflation, and why I think before the end of the year, the Fed is going to massively shift gears in what they're doing. I'm going to show you a couple of people that agree with me, and I'm going to tell you why I think Jerome Powell also agrees with me. It's just something he can't say out loud. So we're going to talk about all of that. Right now, inflation and what the Fed is doing with rates is really dictating. It's the number one thing that's dictating the economy and the stock market. So particularly the small cap high growth stocks, which we cover a lot on this channel, are getting decimated as a result of current policy. So if this is content that you're interested, please remember to subscribe to the channel and hit the notification bell. Also, we're almost at 10,000 subscribers, so subscribe so we can get to 10,000. So I appreciate that. Thanks so much. And while you're at it, you might as well smash the like button. Thank you. Okay, let me get into what I'm talking about. All right, first of all, we know that the Fed just did 0.75 rate hike, 75 basis points last month, or actually this month in June. And that has not been done in, I think it was 28 years. So that was a big change. So I'm going to go to an article here from Reuters on June 21st, 2022. So that was about a week ago. And this is saying Fed to lift rates by 75 basis points in July and 50 basis points in September, according to a Reuters poll. So this is what the market thinks. This is what the market is pricing in. We just did a 75 basis point raise. We're expecting another one and then another 50 after that. So that would be some of the most aggressive rate hikes in 30 or 40 years. Now, I do think that that's actually going to happen. This is not where I disagree. I think we probably will get both of these rate hikes. However, where I differ is I do believe that the Fed is almost immediately going to have to shift gears, and before the end of the year, they are going to have to switch strategies and start talking about lowering interest rates. In addition to that, they will start talking about quantitative easing. Right now, they are raising interest rates and reducing their balance sheet, which is quantitative tightening. So I think they're going to reverse both of those positions. I think they're going to do it before the end of the year. But first, I think they're going to do these items. And I'll let Jerome Powell explain why, because he has a quote that basically says so. So I'll start with Jerome Powell, and then I'll get to a couple of people that, sometimes I agree with and sometimes I don't. And you guys probably will feel the same way. But on this particular issue, they both agree with what I'm saying. Okay, so this is a quote from Chairman Powell. Is there a risk we will go too far? Certainly. There is a risk, but it's not the biggest risk to the economy. The biggest mistake to make would be to fail to restore price stability, Powell said during a policy panel at the ECB Forum on Central Banking in Sintra, Portugal. Okay, so here he's saying, is there a risk that they will go too far? He's saying, yes, it is, but it's not our most immediate risk. Our most immediate risk is inflation. And this inflation, which was supposed to be transitory, has lasted a lot longer than anybody expected. So let me know in the comments section if you want me to do a deeper dive on what I think is going on with inflation and where that's going. But I believe that these rate hikes that have already occurred and that are about to occur are going to be an overshoot, and the economy is already, in my opinion, in a recession, although it has not yet met the technical definition. But to me, the most important part of a recession is consumer sentiment, and the consumer sentiment is all already at that we believe we're in a recession. So effectively, if the consumer believes you're in a recession, then you are in a recession. While inflation has been unprecedented and it has yet to turn around, I do think we're not very far from inflation dialing way back. We already have a lot of major retail stores that have too much inventory. There's a lot of underlying fundamentals that seem to indicate this problem is going to reverse itself. And I do think in the end, this was going to be transitory. It was just going to be a much longer duration than we expected. Now, the price of fuel is one of the main things that is driving this. So we'll have to see, what the administration does on their policy with fuel. Either way, in any instance, with consumer confidence dropping like it is and consumer spending likely to follow and a recession around the corner or already here, I do think later in the year, the Fed is going to be a position to do a 180 on what they're doing right now. And actually, I believe that a part of what they're doing right now is rapidly raising interest rates and lowering their balance sheet so that once this recession is confirmed, I expect that somewhere in the fourth quarter, the Fed will start to reverse their policies. But their ability to reverse their policies will only be due to the fact that they have these major rate hikes right now and the sell-off on their balance sheet. So they're basically clearing the deck right now, in my opinion, raising interest rates so that when the time comes and they need to, they'll have the ammunition to lower interest rates, right? If they don't raise them now, they can't lower them later. So I do believe this is a means to an end. I think all these rate hikes are coming. I think we're going to get 0.75 next and 0.5 after that. And then I think we're probably going to steady the ship. And then I think sometime sometime before the end of the year, we will at least hear the Fed talking about lowering interest rates, if not actually lowering them. One of their most effective tools is actually talking about doing something to the interest rates, more so even than actually doing the thing. So the first tool that they will use is sometime in the fourth quarter, they will start talking about lowering interest rates. And that will be a big change for the stock market. So how does all this circle around and relate to the stock market? If the Fed starts talking about lowering interest rates and some quantitative easing, all of a sudden you're going to have two massive forces that were pretty much a tidal wave against the stock market turn in the other direction. So I see this bottoming out at some point. I see the Fed completely reversing their position. And so therefore, I don't necessarily think they're making a mistake right now. I just think that this is something that the Fed is doing and preparing themselves for the next phase of what we're going to be in the economy, more so than responding to the current phase of what we're in the economy. And I think that makes sense, but it's certainly something they can't say out loud. And I think Chairman Powell's response right here, where he talks about the potential risk, but it's not the most imminent risk, I think that's, that's a little bit of a signal that I believe he's thinking along these lines. Okay, I want to talk about two people that I think have pretty much the same point of view that I'm expressing. And again, I'm going to preface this by saying I do not always agree with these people. So, I very rarely completely agree with anybody. Probably most of you are the same way. We all have our own opinions. But in this particular instance, I have two different people that are pretty high profile that I think feel the same way. The first one is Cathay Wood. So this is an article from Bloomberg. Cathay Wood says that she got inflation duration wrong. So I'm just going to read a little bit of this article because I think she's alluding to the same thing that I'm talking about. Cathay Wood on Tuesday said she erred in her prediction inflation would unravel as the prices of goods and services in the U.S. soared to 40-year highs, and said the U.S. economy is currently in a recession. So she's already calling the recession, and I think that's right. I think she's right on that. So she then goes on to say, we were wrong on one thing, and that was inflation being as sustained as it has been. I can't believe it's taken more than 2 years. And Russia's invasion of Ukraine, of course, we couldn't have seen that. So inflation has been a bigger problem, but I think that it has set us up for deflation. So I know that Cathay Wood's long-term outlook has always been that we are moving into more of a deflationary environment. So this inflation has lasted longer than she expected. I wasn't really sure what to expect. We broke our supply chain in many ways. We had some unprecedented events occur that, I think are unlikely to occur again. And if they do occur again, we will have learned from the experience of going through this crisis, and next time the impact will not be as great if we find ourselves in a similar situation, in my opinion. That is how the financial markets work. That's how everything works, really. The market and the economy learns from its mistakes, and it builds in some safeguards so that if we were to fall into the same situation, it won't be as damaging the next time around. Okay, next I have Michael Burry. So if you remember The Big Short, if you watched the movie The Big Short, essentially he's an actual person. There was a movie based on him. He predicted the subprime mortgage collapse years in advance. He's made many other predictions since then. Some have come true, some have not. So I definitely am not always on the same page with him. But here we happen to agree. So he says, Big Short investor Michael Burry predicts inflation will slow later this year and the Fed will reverse course and cut interest rates. So basically he's saying the exact same thing that I'm saying, and really what Cathay Woods is saying. Okay, so I'm just going to read you the bullet points in this one. I'm not going to read the whole argument, but essentially Michael Burry suggests the Fed could reverse course on interest rates and slash them again. And then number two, the Big Short investor expects inflation to slow as retailers cut prices to get rid of inventory. And then thirdly, Burry previously warned that dwindling savings and soaring debt could spark a consumer recession. So again, he's alluding to a recession. Cathay Woods said we're already in a recession, and consumer sentiment in general is telling us that we are in a recession, whether or not it's been technically confirmed or not. So Burry goes on to say, this supply gut at retail is the bullwhip effect, he wrote. Deflationary pulses from this, disinflation in CPI later this year, and then Fed reverses itself on rates and quantitative tightening. So he's saying that's the cycle. In this instance, I agree with Cathay Wood and I agree with Michael Burry. Oftentimes I do not, but we seem to be lining up on this one. And actually, I think I agree with what Jerome Powell is saying if you read between the lines. So I think we can expect more rate hikes. That seems like it's almost an absolute certainty, particularly the 75 basis points coming coming in July, but I do think sometime before this year ends, sometime in the fourth quarter, you're going to see the talking points from the Federal Reserve do a complete 180. That's my expectation. I think at that point, that will be a healthy thing for the stock market. So, between now and then, we may be in very choppy waters, but this is what I'm looking for later in the year. So let me know what you guys think of this. Does this make sense? Do you agree? Do you disagree? Are we in a recession? Drop your thoughts in the comments below. And if you want me to do a follow-up on this and a little bit of a deeper dive, smash the like button. And if I see that people have interest in this, I will follow up on what I'm talking about. So again, this is not financial advice. I don't know what the Fed's going to do. This is what I believe. And you can see there's some other big players in the market that have a similar belief to this. So that's all I've got for you in this video. Thanks so much for watching. Remember to subscribe and smash the like button, and we will see you in the next video.